Good morning, ladies and gentlemen. I just realized that I had muted myself. I apologize for that, and I'll be starting the presentation now. If there are any problems, you can raise your hands, and I'll be able to see what the problem is at that point. I would like to welcome you all to today's webinar, which is on representative offices versus limited companies. It is a detailed comparison between the two types of entities that can be established in China. I would first like to provide you with a brief introduction to our firm. My name is Christina Kohler. I am one of the directors of Clayco Group. We are an international management consulting firm. It is also our family business where my father, my brother, and myself are involved. My father started the company in 1979. And since then, our offices have expanded to 10, based in China, Hong Kong, as well as in Singapore. And we have over 120 consultants, accountants, and legal professionals on staff. The services we provide include market entry consulting, strategy development, tax advisory work, followed by implementation and incorporation of entities in China, Hong Kong, and Singapore, as well as the outsourcing of accounting, tax filing, payroll services. We also offer trade and supply chain services in terms of trade, handling with China. The majority of our clients are small, medium-sized companies that are all looking to do some sort of business in China. We have several international desks, with our international consultants being based in both our Hong Kong and Shanghai offices. The languages we speak are German, Spanish, Italian, French, Russian, and Japanese. English is the universal language that is being used in our company. I would like to start off the presentation today by explaining why I have created such a presentation. Last year, due to many of the new regulations that were issued by the Chinese government, we were realizing that a lot of our clients that had representative offices in China were extremely confused by what the differences were and what you could and could not do with a representative office and what you could and could not do with a limited company in China. Due to the new regulations that came, we advised many of our clients that were at a certain size to actually convert and set up a limited company in China. The reason for this was that there was no more tax efficiency that was in place for the rep office, and we found that actually our clients could be more tax efficient and even more flexible by having a limited company in China. So, as a consequence, I created this presentation, which is actually an apple-to-apple comparison. What is the difference between a representative office and a limited company? I would like to start off by explaining what are the types of entities that can be established in China. The first is a representative office, which is a liaison office that is tied to the parent company, and it has no liability. The liability falls completely on the parent company. On the other hand, there are different forms of limited liability companies, and this is where the confusion lies for many of my clients. A limited liability company is liable up to its registered capital amount. There are 4 types of entities. The most famous one is the wholly foreign-owned enterprise, which is owned by a foreign investor. This is something that I'm sure a lot of you have already heard about, but simply put, it is a limited liability. It's an LTD, or in the US you would call it an LLC. And it's got foreign investors as its shareholder. The next is a foreign invested commercial enterprise. Now, in actual fact, this is a WFOE. It is a limited liability company that is owned by a foreign investor. Now, the only difference between a WFOE and a FICE is that a FICE is actually used for trading operations. And one of the new additional licenses that can be applied for is an import and export license allowing you to handle all trade functions yourself. prior to 2004, all of these import and export functions had to be outsourced to import-export agents. Since 2004, this is no longer required. Then there are domestically invested enterprises. I created this name myself, but it's purely to explain the differences between all the companies in China. And simply put, it is owned by a mainland Chinese investor. So you have two types of entities which are owned by foreign investors. One LLC, which is owned by Chinese investors, and then finally you have joint venture structures, which are owned between foreign investors and mainland Chinese investors. Again, I would like to reiterate, all of these types of entities are LLCs. So their corporate structures, registered capital requirements, they all follow company law and tax law, although domestically invested enterprises do receive better preferential treatments from the government, but the actual structuring is identical to a WOFI, a FICE, or a JV. The next is you have the legal status. An LLC is an independent legal entity, and it is fully responsible for all of its activities. A representative office, on the other hand, is not independent. It is tied to its parent company. And it is not responsible for all of its activities. This falls under the parent company. The parent company is actually liable for all the activities that the rep office handles in China. The parent company requirements, an LLC shareholder is basically either an overseas company, an individual, whether it be a mainland Chinese or an individual from outside of China, or a domestic company. ARO, on the other hand, can only be owned by a company that is established overseas. And since March 2010, the company must be at least 2 years old. Now, there's I'm sure a lot of you have heard about the advantages that a Hong Kong company can be used as a holding company. And we still receive many, many inquiries on a daily basis, having foreign investors asking whether a Hong Kong company can be purchased that is already 2 years old. In theory, yes, Hong Kong does have shelf companies which can be purchased. The same can be said in the British Virgin Islands and Seychelles, as well as in Singapore. The only disadvantage at the moment is that there are no more two-year-old companies available in Hong Kong. We've also made a research that in Seychelles and British Virgin Islands, there's also a lack of existing two-year-old companies. As a consequence, Hong Kong and any other offshore jurisdiction may not be feasible. The only other solution would be to set up the company and wait 2 years until it's fully established. Now, Clayco Group, we do have shelf companies on stock that are currently 1.5 years old, in which case you could purchase these shelf companies and use them to set up the rep office in 6 months' time. Business scope. This is something that causes a lot of confusion as well in China. Something that needs to be pointed out, and I'd like to make a comparison, is that in Hong Kong, your business scope is very vague. There is no requirement in Hong Kong to be specific in terms of what you're doing. You can actually say in your business scope that you are a holding entity or simply an import and export company. In China, however, you must specify what is your business scope. For an LLC, you can either be a service entity, a trading entity, or a manufacturing entity. And in this regard, you need to state whether you're doing production, trade, or service. In order to provide you with a little bit more detail in regards to the types of entities in China, a manufacturing entity is allowed to do trade and service. A trading entity is allowed to do trade and service, and a service entity is only allowed to do service. So it goes down in actual business scope permission in terms of the types of entities you have. A representative office also has a requirement in terms of its business scope. And actually, the company law is very gray in this area, and this is what causes a lot of confusion for many people. A rep office, being that it is a liaison office, can actually only handle market research that it will conduct for its own parent company. It can do marketing. It can do sales in the form of finding customers. It can find suppliers, but it cannot handle any negotiations with the customers or the suppliers. It is only a liaison office. All of these negotiations should actually be occurring with the parent company. The next item is capital requirement. There are two issues here that need to be taken into consideration. By company law, an LLC must have a minimum registered capital of 30,000 RMB. Now, for many foreign investors, when they realize that the amount is only 30,000 RMB, they're actually extremely happy that they only have to put in this amount. The downside to registered capital is actually the fact that it is also your working capital, and you must use these funds to pay all your initial startup expenses. Now, the disadvantage is obviously that this registered capital is also your liability, and as a consequence, it should not be too high. On the other hand, this capital is coming into China, is permitted to be used for all startup expenses, and in addition, there are no tax implications when using this working capital. So actually, the advantage on this is that you will not have any tax implications, whether it's profits tax, business tax, VAT. It's purely that you are spending this money for your expenses. A rep office, and let me also say, this will fall into how you're going to do your tax efficiency structure, because you're not paying any taxes on this incoming capital. An RO, on the other hand, has no initial capital investment. In fact, it has no capital investment requirement. The only capital that it requires is what is needed to be funded by the parent company to pay for all operational expenses. Now, in general, we have many clients that remit funds on a monthly basis, and these funds are then used to pay off all expenses that are generated by the rep office. And it's just a continuous cycle after that point. Corporate structuring. An LLC, I must admit, is slightly more complicated than a representative office. However, an LLC corporate structure is very similar to what is required anywhere else in the world for an LLC. You have an investor, which is the designated shareholder. This can be, again, a company or an individual. The investor will appoint a board of directors, which must be a minimum of 3 people. An alternative solution to a board of directors is also an executive director, which only is 1 person. A supervisor, this is something that is new. It's a new position that was created and was required since now 3 years, has been created in order and is appointed by the investor and has been created in order for the supervisor to actually oversee all decisions that are being taken by the board of directors or the executive director. The main responsibility for this position is actually to supervise that all decisions are according to PRC compliance. And obviously, the supervisor cannot be a member of the board of directors. In general, if there is a board of directors or there is an executive director, the chairman of the board or the executive director will be the designated legal representative. The legal representative is actually the face to the company, legal face to the company. Should there be any type of malpractice whereby something has gone wrong within the company, the government or additionally the police will be approaching the legal representative first. So they take on the full legal responsibility of the entity. For a representative office, the only person which needs to be appointed is the chief representative, and the responsibilities are identical as the legal representative. The chief representative has full legal responsibility on the representative office and will be the first person that is approached by the government. Employment of staff. Now, in actual fact, an LLC can employ a foreigner directly. The employment contracts can be signed directly between the LLC and the foreign national. There are no limitations in terms of the number of foreigners you can hire. This is in comparison to representative offices, which have a limitation that they can only employ 4 foreigners under their payroll. Otherwise, a rep office can sign employment contracts directly with all foreign nationals. So here, there isn't a great difference in terms of employment for foreign nationals. The only difference is really the limitation that a rep office actually provides. For the employment of the mainland Chinese, an LLC again can sign employment contracts directly with their mainland Chinese staff, and they can handle all social insurance aspects also. Whereas with a representative office, you must use a third-party employment agency. And this can be, for example, FESCO, Zhongzhi, China Star, APHR, and they will actually handle all social insurance, personal income tax requirements for the mainland Chinese. Now, I have many clients that come to me and say, I don't like the idea of an employment agency. I don't like that there's this intermediary between my entity in China and my staff. Now, I don't see there being any disadvantages by using an employment agency. If you are a small company in China, actually the employment agency can be considered as your HR department. And you can obtain all information related to labor laws, HR requirements from them. So in this regard, they are an advantage. In addition, they are updated immediately by the Labor Bureau in regards to all new regulations that are being issued. So again, they are a very valuable resource when you are a small entity in China. I have actually made a comparison that if you are a company in China of 30 staff or less, you should use an employment agency for cost efficiency purposes. Because if you are actually 30 people or more, then an HR director would be more advantageous when you're comparing salary to employment agency fees. I actually would even recommend many LLCs to use employment agencies. The employment contracts can still be signed directly with all employees, but the employment agency is used as an outsourcing payroll service for all payroll functions and HR functions as well. Now here comes actually the interesting part as to why LLCs and rep offices are very similar. An LLC and an RO, they are both required now to produce financial management reports. Prior to March 2010, rep offices were only required to produce expense reports. This has now changed. They are now required to produce financial management reports. An LLC has the ability to offset its expenses against its revenue, whereas a rep office has to pay tax on its expenses. It cannot offset its expenses. You also then have profits tax in China. An LLC must declare profits tax on a quarterly basis, and the rate is 25%. For a representative office, there is an actual formula which is used to calculate the profits tax and business tax together. And in short, you have to calculate the deemed revenue that will be earned by the rep office by utilizing the expense amount. And on the expense amount, just to make it brief, the tax that will be applicable would be between 12 and 15%. So for a rep office, on all your expenses, you're actually paying between 12 and 15% tax now. And this is accumulative for both profits tax and business tax. You also have now value-added tax. An LLC, if it is doing trading business, has VAT, which is applicable. You have input VAT on purchases and output VAT on sales. And your VAT payable, which is on a monthly basis, is the output minus the input. It's a very similar concept as in Europe as well as in the US. A RO actually should not have any VAT requirements. However, there are many representative offices that are actually handling operational business. What do I mean by operational business? It means that they are actually negotiating prices with suppliers or even with customers. As a consequence, if there is ever an on-site visit by the tax officer to the representative office, they may require, and the representative and the tax officer feels that the representative is operational, the tax officer may request to see all transactions by the parent company that have flowed through the representative office in terms of negotiations. And VAT may be applicable on these transactions. This comment is actually to scare all of those that do have representative offices. Be careful in terms of what you're actually doing within the RO entity and what actual activities your staff are handling, because this could then apply. You could be that one unlucky rep office that is caught by the tax bureau and has to pay this VAT amount. As mentioned previously, there's also business tax. Business tax for LLCs are based on all service invoices that are issued, and they are payable on a monthly basis. This business tax cannot be offset for an LLC. One thing I would like to point is that currently there is a pilot scheme that just started in January 2012 in Shanghai only, which is actually has eliminated business tax and replaced it with value-added tax. We will see probably in 6 months to 8 months' time whether other cities in China will eliminate business tax and actually take on VAT. The rep office, as mentioned previously in this slide, has business tax and profits tax together, whereby you're still paying between, as mentioned, 12 to 15% on the expenses. In addition, on all value-added taxes and on all business taxes, there is an additional surtax. So the surtax is actually calculated on the VAT payable and the business tax payable. These are relatively small amounts, but still need to be taken into consideration when calculating prices. This surtax was implemented in December of 2010. And I don't see this changing at all. The percentage rates have also not changed. And they are applicable for both LLCs and representative offices. The last tax implication is individual income tax, whereby every employee, whether they are working for an LLC or a rep office, must pay personal income tax on a monthly basis. So to sum up, the tax implications and the accounting implications, in actual fact, there aren't many differences. The requirements and the activities that need to be performed are very similar. The issue would now come into how you can actually structure your LLC to be tax efficient, or even better put, more tax efficient than a representative office. Annual maintenance obligations. Again, I have a lot of clients who don't understand what are the differences between a rep office and an LLC. Both types of entities must perform end-of-year audit reports, and they both must be submitted at the same time of the year. In addition, there's annual individual income tax, which is required for all employees earning more than 120,000 RMB. And again, they must be submitted for both employees of LLCs and ROs. Annual profits tax filing must also be done for both LLCs and representative offices. Annual inspections. As of March 30th last year, a new regulation was issued for representative offices that RO inspections must take place on an annual basis. The reports must be submitted by June 30th. The biggest disadvantage for the ROs when they're applying for their RO inspection is that they are required to obtain notarized copies of their business licenses of the parent company from the Chinese embassies. It is quite a hassle to obtain these types of documents. And in Hong Kong, as there is no Chinese embassy, you must actually work with China-designated lawyers in order to obtain these notarizations. With an LLC, an annual inspection is also required. It must be submitted to 7 different government bureaus, but there are no requirements in terms of what is needed from the parent company. It's just a standard procedure. Business license or registration certificate renewal. An LLC has a business license. This license must be chopped and reviewed on an annual basis. There are no further documents which need to be provided when doing this renewal. An RO must perform an RO renewal. Now, we have been lucky with some clients whereby we have renewed their rep office recently, and they have no requirements in terms of renewals any longer, but they must still do the RO inspection on an annual basis. We have other clients, it's actually depending on the location, whereby the rep office needs to be renewed every 3 years now. But again, you need to have notarized copies of the business licenses of the parent company. So in theory, you might actually need this twice, for the rep office inspection and the rep office renewal. Now, here's just a brief summary of what is our opinion in terms of why you should use an LLC versus a rep office. It is my opinion, having been in China for 8 years, that looking at all of the government regulations that have now been imposed on representative offices, it does seem that the government is looking to actually cancel or eventually eliminate representative offices. It seems like it's going in this direction. Whether they will actually do it is, of course, another issue. If you are a representative office with 6 or more staff, please do take into consideration to change into an LLC structure. It will only offer you more flexibility. You will be in an area of black and white with the law versus gray with representative offices. In addition, we could actually structure the rep office to be more tax efficient. And this is actually point 6 that I would like to now discuss in a little bit more detail. As I've mentioned, a representative office can only handle liaison work. In theory, it should not be handling any type of negotiations with suppliers or even with customers in terms of pricing, contracts, etc. As a result, I've created a business model here which can actually benefit you if you set up an LLC and perform these functions. So in theory, the functions of a rep office will be inside the LLC, plus you can do negotiations properly. And there are no trade transactions or service transactions that are going through the entity. I call them a real operational LLC. So it basically means you are not actually operational in terms of handling transactions, but you are operational by having a proper LLC in place. How would this work tax-wise? Well, let me start off business scope-wise. Business scope-wise, you would be able to do everything that you would like to do without worrying that the government will come and chase you because you're not within the realm of your business scope. So you would be flexible in terms of all activities that you would like to do. and you would have the option to expand on these activities at any point should you wish by just changing your business scope. In the tax situation, what you can do, and this is something I've mentioned regarding registered capital, would be step 1, the registered capital comes into the bank account in China and is used to pay all initial startup costs and expenses. As mentioned, the advantage is that the registered capital has no tax implications on it. Obviously, the disadvantage is that it is your liability. Hence, you don't want the capital to be too high. My suggestion would be to make a business plan, calculate how much capital you actually require for year 1 of operation. What this entails is calculating all expenses that would be applied to your LLC in the form of rent of office, salaries, utilities, and travel expenses. So actually the same expenses that you would generate through your rep office. And your registered capital should match this operational cost that is required for 1 year. Step 2 would be use this capital for year 1. In actual fact, the LLC will not be invoicing or handling any trade transactions. All it would be doing is using this registered capital for its startup costs and expenses until it runs out. So year 1, there is very little actual accounting work that needs to be done. It's actually identical to a rep office. But you're an LLC. Once this capital is used up, at this point you will need to have additional capital. Now, I do not recommend you to increase the registered capital amount because, again, it's your liability. But what you can do is have the China entity issue a service invoice to the shareholder or even another overseas entity, and this invoice would be equivalent to the operational cost. So again, you're issuing an invoice that is equivalent to the operational cost that is required by the entity. And you can issue these invoices on a quarterly basis or a monthly basis. This is up to you. On this invoice, there would only be business tax which would be applicable, as well as the surtaxes, and this would be 5.9%. So let me make now very clear a certain point. With a representative office, you have to pay tax of between 12 and 15% on your operational cost per month, or in some jurisdictions per quarter. Here, with an LLC, you would be issuing a service invoice equivalent to your operational cost, and you would only be paying 5.9% tax. That is almost, well, it's more than half of what you would be paying with a rep office. It's less than half of what you would be paying with a rep office. That is a huge tax advantage for you. Now, step 2, and this is again my opinion and what I would recommend, is that step 2 could continue for year 2, year 3, and potentially year 4 of operation. But starting from year 5, it would be highly recommended that some sort of profit is actually made within the LLC. You might even find that at year 5, you have to start invoicing domestically, or you have to start using this LLC for actual trade transactions. If you still foresee that you don't need this entity for transactions, then the service invoice amount should be your operational cost plus a 2 to 3% margin. On the service invoice, you would be paying 5.9% tax, and on the 2 to 3% margin, you would be paying profits tax of 25%. Now, the reason why I say make a little bit of profit, the only reason is actually to avoid having the tax bureau come to your office and say, you're now in year 5, why are you not making any type of profit, but you're expanding your business and hiring more staff? Just pay something. Every tax bureau anywhere in the world is happy when you pay something. So in order to avoid any type of suspicion, make a little bit of profit in China for year 5. So year 1, you use your registered capital. Years 2 to 4, you have a service invoice, which is equivalent to your operational cost. And year 5, you actually then have your service invoice equivalent to operational cost plus 2 to 3% margin. And this is all for tax efficiency purposes. But more importantly, it puts you in an area whereby you are an LLC, the maintenance requirements in terms of annual requirements, even monthly requirements for accounting are identical to a rep office. In addition, you don't need any other documents from the parent company, and it makes the whole process slightly simpler. Again, in terms of also hiring staff, it's quite straightforward. So this business model can really be used for those type of entities that are already existing ROs and are not ready to do real trade transactions, or even for companies that are not yet in China and are thinking about coming, but are not sure whether they should go with the rep office or LLC route. If you have the plan to be in China for a long-term period, then go with an LLC. The reason being that if you start with a rep office and after 6 months or 1 year you decide you now need an LLC, you will actually have to shut down the rep office and go through the new establishment of setting up an LLC. A rep office cannot be converted into an LLC. So this is also something you need to keep in mind. This is actually the end of our presentation. I hope that it was very useful for you. If you do have any questions, please do not hesitate to contact us. As mentioned from the beginning, my name is Christina. My details are here. You can email me at christina.kohler@clayco.com, or you can reach me at the phone number that's listed there. I am actually currently in our Hong Kong office, so you can also reach me at the Hong Kong number. I will be sending the presentation to all attendees, so you will also have it on file. But again, if you do have any questions that are related to your business specifically, then please do not hesitate to contact me. In addition, you can contact one of our other offices also to have a meeting. And if you're looking for further information, you can also go on our website to subscribe for our magazine. You will also get information on our future webinars that will be taking place. All the topics for our webinars will be related to China and Hong Kong issues. The next webinar taking place will be in March. We will be holding 3 meetings for the 3 different time zones of the US, Europe, and Asia. So again, I hope you enjoyed today's webinar, and if you have any questions, please do not hesitate to contact me. I wish you all a good evening and a pleasant day. Goodbye.